welcome everyone. Thanks so much for joining FTX in the Bahamas. I know it must have been a tough decision to give up your week at work to come hang out at the beach, but thank you very much for making that choice. So today is an exciting one for me for two reasons. The first one is I have a world-class panel of crypto investors. Their styles are fairly different, so I think there'll be something for everyone in the audience. And hopefully we can at least provide some alpha advice to contribute to those ticket prices. So I'll let the guys introduce themselves one by one and just give a little bit of background to the style of investing that they do in crypto.
Sure. So I'll go first. My name is Will Peets. I'm the founder of 100 Acre Ventures. We run a liquid investment strategy. So we're a long-short hedge fund, again, purely looking at liquid token opportunities, combining a kind of top-down quantitative risk framework with a bottom-up long-short fundamental token selection strategy. Thematically, we've been pretty focused on stablecoins broadly, and specifically algorithmic stablecoins. More recently, doing a lot of work on NFT marketplaces, and say in general, try to look for themes that we think benefit from kind of the broader adoption of crypto holistically, as opposed to kind of winner-take-all type opportunities.
I'm Peter Johnson. I am the co-head of private investments at Brevan Digital. So I co-lead our venture investments in equity and tokens. And we are a thesis-driven venture capital firm, and we combine that with active trading and participation in the crypto markets. I think that is a key part of success in this market, something that I saw at Jump. I previously spent 9 years at Jump, started their crypto venture investing strategy about 7 years ago, led that strategy for 7 years until about 2 months ago when I joined Brevan, and we've been very active so far, invested about 20 companies in the fund so far.
Wow.
Hi, everyone. My name is Paul Veradittakit. I'm a general partner at Pantera Capital. Pantera Capital is one of the earliest institutional fund managers deploying capital into cryptocurrencies, starting off with Bitcoin in 2013. We have a fund for every strategy, and we just recently closed on a $1.3-ish billion venture fund. So for us, I mean, equity tokens, active trading, we do it all. I've been a career venture capitalist now, and I've been in crypto for about the last 8 years. So I do a lot of infrastructure type investments and lead our private investment efforts. So for instance, I'm on the board of Alchemy, and those types of developer tools or fiat on-ramps, done a lot of those with Peter. Those are definitely our bread and butter.
I'm Nick Gustafson. I work at CMS Holdings. We're a hybrid trading and investment fund. Started out mostly active trading strategies and kind of evolved into a venture fund with a thesis of investing in tools and products that we could see ourselves using as traders. So it started out in a lot of DeFi protocols and has sort of evolved into also investing in infrastructure projects that are powering these applications. Personally, I worked in traditional finance for about 12 years, trading corporate credit. A lot of us at CMS have trading backgrounds.
Great, awesome. Well, Peter and Paul, I'm going to direct the first question to you because you guys have been most active on the raise side at the moment. So just interesting to understand a bit more about the investor climate. Paul, maybe you can give us a bit of context on how that's changed in the past, I don't know, is it 5 years? Yeah, and but also just to hear what investors are currently excited about, and perhaps some of the things that the more traditional investors are still apprehensive about.
Okay. I can start off first. We just are at the tail end of a $1.3 billion venture fund fundraise, and I've been fundraising since 2014. It's changed quite a bit. I mean, it took us 3 years in 2014 to raise $25 million. And now we're actually getting check sizes larger than $25 million. And I think number one, the dynamic in these meetings have changed quite a bit. When we were fundraising in 2014, it was about, tell us about Bitcoin. Why are there certain 21 million Bitcoins in existence? Like, tell me about mining. Tell me about security and a little bit on regulations. Now the topics of conversation are not around the number of Bitcoins or the technology, but really what are the use cases and how do you think about the evolution of the space, both in terms of innovation and also in terms of just asset diversification. And that's been a fairly huge change. For us, our investor base has changed quite a bit. It used to be 25% retail, and now we're getting probably 80 and 90% institutional. Everything from your pension funds, your endowments, and sovereign wealth funds, et cetera. So it's been quite the change. And I'd say the biggest question that we sort of get is probably around how much to put in. And so we usually recommend probably a little bit less than they normally put in. But also, I think the other thing that's changed quite a bit too is that a lot of these capital allocators, while they understand venture and they have allocations for venture capital, they're actually more open to tokens than ever before. I think from a sort of returns perspective, but also things like DeFi are a bit more understandable. You can actually build models. You can actually understand where some of these tokens derive their value. And so the request to us when we started this fund was, don't raise a hedge fund. Don't raise just a pure venture capital fund that invests into equity. Give us a venture capital type vehicle that we can be long-term investors in, that we're familiar with, that you can actually allocate across different strategies. So I don't have to go back to my investment committee and try to pitch 3 different funds and 3 different strategies. I just want to invest with you. And I actually think that investing across 3 different strategies in one vehicle actually optimizes for performance too. So that's been sort of something that we've really kind of given to these institutional allocators.
Yeah, I've been really impressed with the institutional allocators. Jump, it was all proprietary capital, so this was my first time over the last few months talking to pension funds, endowments, those types of folks. And most of them they're up to speed. Like the decision of the folks that we're talking to is often not, should we allocate to crypto? They've made that decision. They made that leap. They know they need to be in this space. And I think at this point, it's almost riskier to not be in this space. Like nobody wants to be the folks that miss the next generation of the internet. Like they've made the decision, they want to be in crypto, and it's more of a question of how much and how. Should this be a liquid token fund? Should this be a venture fund? Should it be a blend of those 2 things? Should it be Bitcoin? Where should it be? And it's a question of where and how, and not a question of if, because most of them have made that decision already.
Yeah, it's certainly pretty incredible that not to downplay what you guys have done, but pretty much every week, you get every month at least, you're getting a $500 million to $1 billion fund, and hopefully that supports all of what we're trying to do at FTX. So we're certainly pleased about it. But on that note, with so much money coming into the space, and I guess this applies across early stage liquid deals and also more VC deals. It's extraordinarily competitive to get into the deals. What would you say your kind of respective calling cards are when you meet these new teams? That can be. We can go with Nick on these because I know you make a lot of early stage token deals.
It has become extremely competitive. It's been very frustrating actually trying to invest lately with all these billion-dollar funds popping up. We've seen deals that a year ago would be a $30 million valuation, and now it's $150 million, and you can barely get in. So I think the real alpha is finding, I think, less invested L1s, so newer L1s, and finding the building blocks of those ecosystems. Your AMMs, your lending protocols, infrastructure projects. More lately, it's some gaming projects as well. And NFT marketplaces, that sort of thing, and just trying to be early. And that's really hard to do, but you have to find really bright developers because often you're really just investing in a pitch deck and the development team, because if they're further along, it's going to be impossible to get into the deal. So I think it's really finding sharp developers and a core infrastructure project on a promising L1 that you think will continue growing.
I'll go for it.
I was going to say to pepper in some thoughts. I'm fully view this as a venture asset class, especially on kind of the secular tailwind it's going to have. And so from that perspective, very supportive of a venture-style fund and structure. I do think it presents some interesting dynamics within crypto. One, clearly if there's a lot of money being raised, it's more competitive deals, it's higher valuations. I think the other interesting element within crypto versus traditional markets is I think people generally equate liquidity with maturity, right? Like in traditional stocks, as a company becomes more mature at IPOs, and that's probably because it's hit some revenue or product market fit or what have you. Whereas in digital assets, right, you get liquidity well before some of these networks have adoption or are mature. And so the dynamic of venture fund raises and the cap table and then them seeking liquidity prior to a project becoming mature actually offers its own kind of opportunity set on the liquid side. So part of the reason why we were comfortable having just a liquid fund is that we still see a lot of really interesting early opportunities from the perspective of maturity available post the private rounds of these deals.
And I think with the current sell-off in the market over the last 6 months, at the same time as private valuations booming, I think there are a lot more secondary opportunities that look a lot more attractive these days.
Yeah. And so I think structures like Paul was mentioning where fund is a venture structure but has the flexibility to invest into liquid tokens, probably is helpful because they have the flexibility to invest in what they want, take advantage of depressed markets, but also in some respects protect investors from themselves. That's actually why I also like the venture structure, because people get anxiety when there's 40, 50% market crashes. But again, if you believe in this on a secular basis, then clearly you want to stay in the trade. So in some respects, I think that structure is helpful for investors.
Yeah, it's an interesting dynamic because as much as it seems like people don't want the volatility of crypto, particularly in the down cycle, we've seen on the types of clients that we see trading with us at FTX that even this real round of cyclical market weakness, it hasn't really deterred people at all. I mean, it's certainly, I'd say the cadence and size that people are comfortable investing in has changed a bit, but their intention to be in the asset class is unwavered really. Which roll that back to 2018, and that was definitely not the case.
Yeah, no, it makes a lot of sense, and for us, we've been doing investing for the last 8 years, so we've had to change, and then be innovative in terms of how we find these deals. Now we're starting to see the proliferation and activity around university crypto clubs. And we're actually seeing a lot of talent coming out of there, or talent coming out of Web 2.0 companies. So kind of building strong partnerships with some of the incubators like that make a lot of sense. And from a strategy point of view, we're all sort of making good money out there, and to fit into earlier stage rounds, you probably have to go earlier and probably have some ball control. So being willing to kind of go out there, take a lead position, so that you don't get squeezed out of these rounds, I think is extremely important. And I think the other thing that you mentioned around partnering up with ecosystems, especially if that's one of your strategies, I think also finding other types of strategies that are kind of different, like buying secondaries. Like as these founders are, building and grinding, sometimes they want to sell some of their shares to take money off the table. So just kind of going out there and doing a survey and say, hey, who wants to sell some of your shares? Get a strategic investor on the cap table. I think that's another interesting strategy that we're starting to see too.
Yeah, I agree with all of that. And for us, it's really being thesis driven as well. Like there's so much money out there competing for these deals. Like you need to be extremely deep in certain areas and go after those areas and really focus. And that's something that we really do at Brevin is we focus on kind of big macro themes that we think are going to change the world, and then specifically go after those and try to ignore other things. You want to keep an open mind, but also you need to shut out a lot of noise that there is in the crypto markets. And then when you find the deals you want to invest in, it's really highlighting it's the people, it's the resources, and the brand. I feel like that's how you win deals. And especially on the resource side, like right now, there's a ton of money. You can't just be money. You need to provide more than that. You need to be, can you provide liquidity to my token on centralized exchanges, on decentralized exchanges? Do you have blockchain engineers that can help me build my product? Can you help me with recruiting? Are you, an active user of my product? Are you going to be a customer? Those types of things are what you need to do to be in the best deals.
Yeah, a lot of calls are, they call up and they say, okay, our round is completely full, but we could squeeze you in. What value can you provide? And they're basically interviewing you.
Exactly. Yeah.
No, for sure. So just getting back to that market drawdown we're all trying to ignore happening. On the liquid strategy side, how do you adapt your style for hunting for alpha in what is quite clearly, by definition, a bear market versus the bull market last year?
Yeah, I mean, I think it's two things. One, you have to be oriented around being able to actively trade or be comfortable with, using derivatives and other kind of more traditional tools to manage the risk profile of your portfolio. Again, that's something even like when I started managing outside capital in 2017, the variety of tools and derivatives available to you were very limited. And then you fast forward today, and now you have the entire full suite. So that's, I think, one component of it. I think the other component for us, and this is also one of the most positive things I think happening within crypto, is while correlations do seem to be very high on the surface, you are seeing increasingly more and more dispersion. And so again, that enables, more traditional like portfolio construction techniques to benefit the portfolio. Again, one area that we've been very focused, which I mentioned, is on decentralized stablecoins, and specifically algorithmic stablecoins, which has brought us into the kind of Terra and Luna ecosystem. And again, if you look year to date, that's one name that's performed so quite well, in part because it has a very specific valuation model that's driven by USD demand. And so again, I think there's increasingly more examples like that, whether it's going to be Terra or Helium or other networks that, again, once they're at scale and get adoption, that they shouldn't be correlated the way we've seen historically when everything is being just purely speculatively driven. So I think, again, a combination of the types of instruments and tools and portfolio construction, along with some maturation of the asset class, is kind of helping navigate periods like we're in right now.
Yes, so that's an interesting point. I mean, obviously, at the moment, you can do the chart of the Bitcoin against the Nasdaq, and it's scarily well correlated. I think there are some naysayers that will come in and say, well, why am I trading Bitcoin if I can trade the Nasdaq in exactly the same way? And I think where you're going with algorithmic stablecoins kind of brings us to what would hopefully break that tight correlation, which is more positive real-world use cases for crypto.
Yeah.
Peter, do you have a view on on how stablecoins might bring that about? And I know that's like a vertical that you guys are.
Yeah, so that's something that I spend a lot of time on. Also, investors in Luna, was at Jump, and at Brevin Howard. Big fans of what they're building, and overall just big fans of stablecoin adoption, and believe that is, as I mentioned, like we invest in big macro shifts that we see coming, and one of those is the adoption of stablecoins. That will be a new way that money moves around the world. And I think that's something that a lot of people don't maybe think about, is that this is a fundamentally new thing that anybody anywhere in the world can hold and send and spend US dollars. It is obvious that there is insatiable demand outside the US for US dollars. You look at the euro dollar market, which is estimated at like $20 trillion. The majority of physical currency is outside the United States. Like, there is just huge demand for this. And now suddenly you have this new technology that allows anyone anywhere in the world to hold dollars and spend dollars. And like, what is that going to mean? That is going to be revolutionary, and I think one of the biggest stories over the next few years in crypto. So looking at both centralized and decentralized stablecoins, what are the applications and infrastructure that are built on top of that? That's something that I spend a lot of time on.
Yeah, I've seen, me and Peter have done, Bitso, and we've done some investments in Africa, and we're early investors in Circle, so they have the USDC, US dollar-backed stablecoin, and I remember talking to Daniel Vogel, the CEO of Bitso, and he just said that the interest in USDC and US dollar-backed stablecoins is very, very high, especially in Latin America. And so one of the things that I can see are people building cross-border payment applications using stablecoins. I think for both yield, cross-border payments, and then of course, it's already being used as collateral within DeFi, which I think is uber important, because you don't want something that has to use as collateral that's fluctuating and volatile.
And I think to tie in your earlier question and stable coins is what to do in a bear market like this, or a sideways market. Mm-hmm. And for us, we're doing a lot more yield farming. And right now, with the dollar, you get a couple % in an account. And with stable coins, there are all sorts of ways to generate 15, 20% type returns. On Luna, near ecosystems, they have these ways to generate real yield with only holding stable coins.
Yeah. No, so we've heard from the two lunatics about the L1 they're excited about. I don't know, Nick, I know you focus a lot on near. I don't know if you have a view on that. Other L1 ecosystems you're excited about, Paul?
Yeah, I think I'm pretty excited about Polkadot. We did a lot of investments about a year and a half ago in Polkadot ecosystem. And the parachain structure kind of took a little bit longer than everyone thought to come to fruition, but it's just starting to come out now, and I think there are 10, 15 parachains out now, and I think they've been slowly building the tech, and I think it's really powerful technology. It just took a while, but it's starting to come out now, and I think there's some really powerful teams and protocols that'll come out in the next 3 to 6 months.
Yeah, we're one of the largest investors in Polkadot and Near, so definitely bullish on those two. But outside of that, I mean, we are still seeing a lot of activity on Solana, and I think Solana has made quite a bit of headway on the gaming side of things. So as Peter mentioned, you know, if you can really focus on something, and you know, I think with gaming, sort of with transaction throughput and whatnot, Solana has emerged as at least the top 3 contender to have the platform with most games on it. So still pretty bullish on Solana. I think Avalanche also is pretty interesting too. I mean, things that are EVM sort of compatible, or we're investing into things that are making things EVM compatible. I think that's going to be really important to kind of bridge the ecosystem.
Yeah, and what I've been looking for is like, where are you seeing new things unlocked by these new layer ones? Like, I'm a big fan of Solana as well and have invested a lot in that ecosystem. But one of the things with Solana, when Solana came out and they launched Serum, it was, okay, for the first time really ever, you can launch a central limit order book in a decentralized way. Like, that had been tried on Ethereum many times. The Ethereum blockchain, it just doesn't work. But now Solana comes out, it's faster, it's cheaper. You can actually have a central limit order book. You can have folks like Jump that can come on and make markets on there, and CMS. And you just couldn't do that before. So it's something that was fundamentally new that was unlocked by a new technology. And that's when I think things get really exciting. So I think we're keeping a very close eye on a lot of these to see, like, okay, what is this unlocking that you couldn't do before?
And we can mention every L1 while we're up here, but I do think the Cosmos ecosystem is also quite compelling. It's not hyped the way a lot of other ecosystems are, which is maybe both good and bad. But clearly, it's been a long time growing ecosystem, and kind of the native interoperability again brings things like Luna in the mix with things like Provenance and Hash, which are doing interesting things on the institutional mortgage origination side. So again, it's more of a sleeper in some respects, but I do think it's achieved a lot of big milestones, and I think a lot of interesting things going on in that ecosystem as well. So.
And this wasn't a plug at all, but FTX is actually going to launch an index that includes all of those L1s. So thank you very much for the.
I thought you were going to say FTX.
Not trying to put you guys out of business, but
that would have been great. FTX L1.
There you go. Yeah. So I mean, the one market that has been impervious to cyclical macro is NFTs, or certainly the Moonbirds and Bored Apes and those kind of investments. And I was, interesting that the Bored Ape from Mint is now, I think, quite a bit better of a return than Solana was from seed to the highs. Obviously, for larger investors, it's hard to get direct exposure, though if they keep going up like this, pretty soon you'll be able to buy them. How many investors or institutional investors are asking you for exposure to NFTs, and how do you kind of go about investing in this technology that's been unlocked?
I would say most institutional investors are not asking for exposure to NFTs specifically. They are very interested in the space, rightfully so, and are looking for exposure to the infrastructure that is enabling this. Like, how do you invest in the exchanges and fractionalization and lending platforms against them, and like all of the things that you need around NFTs. We are, I would say, playing with holding some NFTs as well, but it's really more of like an R&D effort and being part of the community at this point than a real alpha generating investment strategy. Can't really scale that right now, but it's really more about the infrastructure at this point.
Yeah, and then, I touched on this earlier. Again, we like to invest in things we think benefit from kind of a growth of the whole crypto economy, or in this case, the growth of the NFT market. So we've been very focused on NFT marketplaces, some of the primitives used for borrowing and lending against NFTs as collateral, primitives that are combining NFTs in different ways. And I think to the institutional crowd, yeah, there's probably some skepticism in looking at the price that profile pics are trading at. But then clearly, if you zoom out, there's just so many different potential applications for NFTs. Whether it's IP licensing and royalties for music. And I think actually that's an area again where it has the ability to decouple. And I'm not sure that the first 3 months of this year are evidence of that versus just again speculation on moonbirds and other things. But I think if you zoom out and again look forward a year or two, I think there's a lot of applications there that bring in again a number of different industries into crypto that a year ago weren't even contemplating why they would care, and I think it's a valuable observation. So,
yeah, I think for us, we are going to actually putting maybe 5-6% of our fund directly into NFTs, but I think we're going to be very slow and methodical about it. I think there's a lot of things that haven't existed yet in terms of infrastructure for liquidity or even tools, even just being able to get the right data, being able to sort of buy at scale and be able to actually put enough money to work in NFTs. But that's the eventual goal. Is we feel that NFTs are quite compelling because not only do you get digital collectibles, but again you get access to a certain community, and the growth of that community and what you can sort of do with that community is quite fascinating. And then of course the intersection of NFTs with both gaming. And so I think in sort of gaming and metaverse is fairly interesting too. And so I think there's opportunities where, as we're investing into a gaming company, we naturally get NFTs through that, and can be helpful there.
Yeah, I agree with that on the gaming side. I think it hasn't been integrated very well yet. There are very few projects that I've seen actually do it successfully. Often because you're investing in games that are going to take a year or two to completely build out, so it's too early to tell. But I know Aurora is a good example, which is a project we invested in. They have one of the biggest NFTs on Solana, and they're going to be integrating that into the game, but it takes a long time, and we just haven't really seen it play out yet.
So, Paul, I'm going to go for you with this one. As the OG perhaps of the group, maybe not. I think everyone gets into crypto, or most people get into crypto because of like the beauty and simplicity of Bitcoin. And like an observation I have is like on a relative basis, I've never seen investors like less excited about Bitcoin. Partially because the yield advantages, and there are other reasons. But I was just wondering, you must still allocate in some of your funds materially to Bitcoin. Has that changed a lot? Do you expect it to change more?
Yes, we have a Bitcoin fund, and it's over $1 billion in assets. We've returned multiple of billions of dollars for investors. There's still inflows into the Bitcoin fund, especially from institutional allocators, which we don't even market it, but they feel like hey, I want to get exposure into crypto, and I really do believe in that sort of store of value digital gold sort of use case, and so we still see flows going into Bitcoin, but a lot more of them right now are interested in a diversified basket of cryptocurrencies, especially L1s. And so the way that we position Bitcoin within our funds is, we do think it should be part of a portfolio, but it is underweight compared to some of the other, tokens out there, either because we just see a bit more utility on some of the layer ones around, DeFi, smart contracts, things like that, but also Bitcoin's at a certain market cap too. And so as we're creating a diversified portfolio, we're trying to find other cryptocurrencies that can provide a higher return. And so therefore, for us, Bitcoin's a single-digit percentage of our entire liquid portfolio.
Yeah. I would say one thing, there's not a lot of venture funds who are going to be incentivized to really market Bitcoin or talk about Bitcoin at this point. I think that's one element. I'm curious to see kind of post-Taproot and more companies that are now maybe using those enhancements to build companies on top of Bitcoin, if that changes. But I feel like the incentive to really talk about Bitcoin now is less than it was, of course, when we all started, and that was kind of the only game in town. So.
Yeah, we just spoke to a project last week who is attempting to start to build DeFi on Bitcoin, and that's what you need. You need all these applications that are going on in all these L1s, you need that on Bitcoin, and then I think it'll explode in interest again, but there's not much to do with your Bitcoin right now.
Yeah, I guess the biggest use case that we were seeing with Bitcoin for a while was around cross-border payments. But again, as we start seeing some of the other tokens, stablecoins or not, have a lot more liquidity, I think that potentially use case sort of drops a bit. And so that sort of brings probably the strongest use case that we've seen in the past with Bitcoin down a bit.
So somewhat relatedly, I've seen a lot of calls on Twitter for the ETH Bitcoin flippening to happen this year, next year, whenever it is, and a lot of that is, of course, related to both the flow and staking changes that are planned for the merge this year. Do you have any thoughts? You're an ETH guy, I would say. Do you have any thoughts going into that event or potential event?
Yeah, I mean, I would say broadly we're very constructive on Ethereum, on L2s being built on top of Ethereum, on the network effects it's always established, are already established. I would say particularly in the NFT space, and I'm sure people will disagree with me, but I still find most of the high value projects and a lot of like new innovative things in NFTs are at least starting in Ethereum. That's not to say that they won't expand to other L1s, but that still seems to be a trend. So all those things, again, I'm constructive on. From a fund, again, how we're oriented, we'll do a lot more in derivatives. So whether that's risk reversals or spreads, into this event at the end of the year, and we've already, quite well positioned for that. But as opposed to just, taking a big spot position, we try to kind of adjust our kind of risk return profile through derivatives there. Excuse me.
I think it's a weird thing that's focused on. I think it feeds into the weird tribalism within crypto of, am I cheering for Bitcoin? Am I cheering for ETH? Am I cheering for Solana? Am I cheering for Near? Yeah. We're all on the same team. We all kind of want the same things. And kind of, the jersey that you're wearing with whatever your favorite L1 is, I don't think really matters that much. That, the things that we're all kind of rooting for. So worrying about which token is where on the rankings isn't something that I think about a whole lot.
So anything else that you are excited about into events coming up into the end of the year that we should be focused on? Other than Tom and Giselle speaking in about 15 minutes. I was saying this is a real bucket list item for me. It's the first time I get to open for Tom Brady, which chubby English guy, you wouldn't have thought it had happened. But
I mean, I think for me, what continues to excite me is the global adoption of crypto. And we're investors in Indonesia, we're investors in Latin America, and so just to see the different trends that are emerging where, stablecoins, yield is starting to be really attractive. We're starting to see, the intersection of, cricket and NFTs in India. I think it's just fascinating to sort of see how each of these companies are building and educating their users, and then starting to see when institutional adoption will start picking up in each of these different regions. And so for us, our bet has been continue to focus on those fiat on-ramps, and then hopefully learn about what type of applications make sense in each of these different geographies. So that's what's exciting for me.
Yeah, me and Paul have done a lot together internationally, so very excited about international crypto adoption and actually the impact that has and real use cases around the world. That's something we're seeing a lot of. It feeds into the stablecoin adoption thesis. Really excited about improvements in smart contract security. That's just one of the biggest issues in the industries, and I think we're seeing a lot of really interesting things happen there. The growth of the derivatives market is something that we're focusing on, investing behind. It's kind of crazy if you look at how small the derivatives and especially the options market is right now.
Especially the options, yep.
Yeah, the options market is 3% of spot volumes in crypto, and in the equities market, it's 30 times the spot market. So it clearly has just a massive room to grow there. So I think that we're going to see there, and that allows much more interesting and nuanced products and people to take views on risk management and speculation and ways to produce income. So those are some really interesting things I think we'll see the rest of the year.
Yeah, I mean, the combination of yield with a liquid options market would just be able to create some really amazing structured products to get people into the market that wouldn't be comfortable with the kind of Delta One risk that we've grown up with.
Yeah.
But great. Well, guys, thank you very much.
All right. Thank you.
Thank you.